Well, TLG Capital is an African investment focused firm, primarily doing venture debt and credit. Our whole thesis is about making sure that we invest in regions and in companies that basically have historically not had access to capital, but finding ways that make sure that we are able to return our capital in the currency in which we invest in. So because we are generally investing in US dollars, we try to find companies that can afford to repay their obligations in US dollars in 2, 3, 4, or 5 years' time. So our whole approach to investing is not how much money do we make, but how do we get our money back? And we have a broad remit across the region in Africa. We manage about $150 million at the moment across different strategies, but private credit is our flagship fund. So I think we've done 35 deals in Africa, and we've exited about 25 of them. So that gives us a little bit of an insight into how these things operate, challenges that you may face, the pros and the cons of investing in a region that still has so much to develop from a governance, from a framework and regulatory perspective. So for us, we think that most firms, entrepreneurs, are looking for other types of capital other than private equity. Private equity allows you have to obviously give up a stake in your company. If you believe in the growth in your vision, you want to have options in terms of the types of capital that you can take and then deploy into your business. And so equity and debt have very different uses and very different end games and end results. The key element to remember with debt is that as fixed income investors, we're not looking for the 10x, 20x, 30x unicorns. We're looking for stable cash flows for entrepreneurs who understand that when you borrow a dollar, you have to give that dollar back, and making sure that you're working with lenders like ourselves to figure out how do we make them comfortable to scale up facilities so that they can continue to borrow as they continue to grow. But I think importantly, it's for all stakeholders to recognize that private credit or venture debt, however way you want to term these infusions of capital, they're not the lenders of like shareholders. We expect to get paid back. We want to get paid back. And repayment is not something that is optional because we're growing very quickly or we've decided to pivot into a new area. So one of the key areas for us as a strategic perspective is that we do not do oil and gas or extractives or mining. So our focus is very much on the rising consumer class in sub-Saharan Africa. And that would be where we focus most of our efforts. So people often talk about Fintech, and that's clearly an area that's arousing a lot of interest from stakeholders, both equity and debt. Access to financing in Africa has always been very low. And so by enabling technology to reach consumers who hitherto have not been able to be part of the financial system is clearly very exciting. But it's difficult. There are a lot of challenges along the way of trying to scale up any tech-enabled business. Whilst I do believe that tech-enabled businesses is the future for Africa and will drive its economic growth, I think folks sometimes get too excited about the bigger picture and not focus on the details that are required to ensure that investments also are balanced out by a commitment to governance, commitment to information rights, commitment to best practice, and building a team that can withstand all sorts of macro shocks that may happen. And we've seen that with COVID, we've seen that with the Ukraine war, and in places like Africa, unfortunately, these external shocks will impact their economies much more than, say, the developed world. For one fundamental reason, we don't have a European banking system or US Fed that will just print money to solve a problem. In Africa, it's a lot more complex in trying to deal with these types of challenges.